Divorce is tough, no doubt about it. It's one of life's most challenging events, not just emotionally, but financially. So today, we're opening up the financial playbook for navigating a divorce in India to help you move forward from a position of real strength. So let's start with what's at stake. According to a One Finance magazine survey, a staggering 84% of divorced women end up spending over 5 lakh rupees just on the divorce proceedings. These high costs often come from legal battles that drag on and all sorts of expenses you just didn't see coming, creating a huge financial hurdle right when you're trying to start a new chapter. And hey, this financial strain hits everyone. That same survey, it found that 42% of men had to take out loans just to cover their legal fees and maintenance costs. The financial fallout is very real, and starting a new life with fresh debt can set you back for years if you're not ready for it. This really gets to the heart of the matter, doesn't it? Taking control of your finances isn't just about managing the bills. It's about protecting your long-term stability and locking down your future. Being proactive here is absolutely essential. So to guide you through this, we've put together a 5-part playbook. We'll talk about the costs, getting a clear financial picture, separating your finances, planning for what's next, and building your professional team. All right, let's dive in. Okay, phase 1. Think of this as your financial recon mission. Before you make any big moves, you need to become the #1 expert on your own financial life. Every single detail is going to matter. This means creating a complete inventory of everything, every income source, every asset, every single debt. You'll have to document all your expenses and pull together 3 to 5 years of financial documents. And make no mistake, this isn't just a good idea. This information is actually required for the financial affidavit that the Supreme Court mandates. Now, a really key concept here is something called Stritahan. In India, this provides a critical legal protection for a woman's assets. It includes gifts and personal property that belong only to her, and legally, it's totally separate from the marital property that gets divided up. For every single asset you have, doesn't matter if it's street-owned, personal, or joint, you need to follow these 4 steps to a T. Document when you got it, what it was worth, where the money came from, and gather every piece of paperwork. This creates a rock-solid, undeniable record of ownership. All right, on to phase 2. Once you have that complete financial picture, it's time to start the delicate process of untangling your financial lives. This is a really critical first move. With a joint account, either partner can legally pull out all the funds without the other person's permission. So it's essential to act decisively to protect those shared liquid assets. But, and this is important, the timing is sensitive, so you absolutely must consult a lawyer before you make this move. It is so vital to understand this fundamental legal distinction. Marital property is the stuff you acquired together during the marriage, and that's what's subject to division. Separate property is what was yours before the marriage, or maybe a personal gift or an inheritance. The key here is documenting this difference with clear, undeniable proof. So here are the practical steps you need to take to build your financial independence. Open a brand new bank account in your name only and get your salary sent there. Get a personal credit card to start building your own credit history. And, start the process of updating beneficiaries and getting ready to refinance any of those joint debts. Okay, so far we've been on defense. Now we pivot to offense. Phase 3 is all about proactively designing the financial foundation for your new independent life. Look, a standard emergency fund just isn't going to cut it here. You need a dedicated safety net with 3 distinct parts. A fund for all the divorce-related expenses, another one that covers 6 to 12 months of your living costs, and a third fund for actually rebuilding your life after it's all said and done. When it comes to things like alimony or maintenance, you can't rely on guesswork. You need to create a detailed budget of your actual post-divorce expenses. This gives you the hard data you need to justify your claims, and it really strengthens your negotiating position. And your calculation needs to be really comprehensive. You have to factor in not just your current household costs, but also future inflation, your earning potential, and any compensation for career setbacks you might have had because of the marriage. With 46% of women working less after getting married, this last point is especially important for a fair settlement. Now, this is not a journey you should take alone, not at all. Phase 4 is all about assembling the right team of experts to guide you through all the complexities that are coming your way. Your first and probably most important hire is a good divorce lawyer. You need to find someone with experience in asset division under your specific personal law, whether that's the Hindu Marriage Act, the Special Marriage Act, or something else. Their expertise is just invaluable. But a lawyer isn't enough. A qualified financial advisor is just as crucial. They're the ones who can model different settlement scenarios for you, analyze the long-term tax implications, and really help you understand the financial impact of any deal that's on the table. Think of it this way. Your lawyer is there to win the legal battle, while your financial advisor is there to make sure you win the financial war. Both of these roles are distinct, and they are both essential for a secure outcome. All the reconnaissance, all the untangling, and the team building, it all leads to this moment, the final play. This is all about creating that comprehensive financial plan that's going to serve as the blueprint for your new life. The settlement you receive, that's just the starting capital. True long-term security comes from a solid post-divorce plan. This means creating a brand new budget for your new life and rebalancing your investments to match your individual risk tolerance, not a shared one. It's about mapping out a whole new retirement strategy and making sure your insurance coverage reflects your new reality. So, the key takeaway from this whole playbook is that preparation is power. By taking these strategic financial steps, you can transform a period of huge uncertainty into a genuine opportunity to build a secure, stable, and independent future. The real question is, what's your first step going to be?